Why the share price of Divis Labs keeps falling? Being a long-term investor in Divis Labs since 2017, I get this question a lot. So let me just do the business analysis of Divis Lab and understand its prospects of the future. This is not a recommendation, and I will just do the analysis of the business itself, not the stock or the share price. What were the growth drivers of the Divis in the past? How the growth drivers are shaping up for the future. So if you want to know, let's begin. If you have been following the business analysis series of say PI Industries or Fine Organics or TTK Prestige, you would know that I do the business analysis in three parts. First is the ratio analysis, then I do the sector analysis, and then I do the business analysis. So for Divis Lab also we will follow the same process, and the first we will dive into the few ratios. There are 20 checkpoints that I go through, and we will go through only 4 to 5 of them right now, right at this point. But you can check all the 20 if you want to be doing the detailed analysis of Divis. The first thing that I look into is always the ROC, and we know that the ROC of Divis Lab has been consistently above 20%, and it has been the case for the last decade, so there's nothing to worry about over here. Then we look at debt to equity, which is always zero, and it has been zero for quite some time. If you look at the balance sheet, the borrowings has been zero for almost 5-7 years. Then I look at the OPM, which has been great. I mean, above 30% consistently for a decade is very good. So yes, I mean, OPM is great. And then profit growth has been good. In the past 3 years, it's around 30%, but consistently for the 10 years, it has been around 19%. We also like to see like if there is a consistent sales growth or there is a one-off jump, and we see that yes, 30%, 35%, around 40%, then 25%, and so there is a consistently profit sales has been growing, and there was a big jump in say March 2021 and 2022, and that is one of the reason why the share price is falling, and we will look into this in detail. And then we see that promoter holding is also good, and there are good cash flows. I mean, the company has more than 80% cash. The profit has been converted into cash, and that's the ratio is above 80%. So all the parameters for the Divis Lab is satisfying. And this was just a routine thing that we have done generally, because I have been an investor in this company since 2007, and I have been following these ratios since 2017, not 2007, 2017. And I consistently have tracked it, and they are all in line with what it should be. Now we will deep dive into the sector analysis. Pharma as a sector has three main types of companies. There are innovators, there are non-innovators, and then there are contract manufacturers. So let's understand each of them. So innovators are those who innovate the drugs, and once they find a path-breaking drug for a group of people, or it's being applied to certain types of conditions, they take a patent and protect that drug for 20 years. So in the 20 years, no other company can manufacture that drug, and these path-breaking innovators sell that drug at a premium price to recover their expenses in research and innovation. Second is the non-innovators. The non-innovators, what they do is they wait for the patent of drugs to get over. So let's say after 20 years, one of the patent gets over, and then there will be players who would manufacture that drug under their own name, and these drugs are then sold in the market at a much lesser price than the innovators. Then third are the contract manufacturers. So every drug requires an ingredient that is the main ingredient of that drug, and we called it like active pharma ingredient or API. So that API manufacturers are the contract manufacturers. So they actually manufacture the drug in bulk and provide it to innovators or non-innovators, and then those innovators or non-innovators actually market the product. Divis Lab is a part of the contract manufacturers or API manufacturers. So Divis Lab is not into innovators, and it also doesn't market any of the drugs. So it is purely a API manufacturing company. And there is no doubt that pharma as a sector will continuously grow for the next decade. The lifestyle of people are changing in such a way that we need more and more medications. So there is no doubt about the growth of the sector and the companies who can dominate the industry, and Divis Lab is one of those such companies who can dominate the industry. So sector analysis gives us that yes, if the company is doing well, if the company can consistently perform, there is a huge scope for growth in the sector itself. The third part of business analysis is to analyze the business itself. The first condition for me to invest in any business is it has to be a unique business. So there shouldn't be too much competition for the business, and looking at the operating profit margin of Divis Lab, we can clearly see that it is very unique business. 30-35% plus consistent profit margin for a decade is not a simple thing to achieve. There are very few companies who would be able to achieve that, and so it has to have some unique products. So in 2017, when I saw the news of an import alert of yet another pharma company, I was shocked to see that though US FDA allowed had an import alert against Divis Labs, it allowed certain products from that same unit, and that triggered me, like, how can a US FDA like body allow import of certain products though there is a issue in the plant itself? That is when I just dug deep into the thing and I found, so I'm just referring to that news that is there. So this is a news from 2017, and we can clearly see that there's an import alert, means that the products manufactured at the plant cannot be sold in the US. The US FDA, however, has exempted a few drugs from the alert. So what does it mean that Divis is manufacturing drugs which no one else can manufacture? That is why US FDA wants the Divis to rectify the issues that are there. But till the issues are rectified, it cannot do without these products. That's a sign of a very unique business. Those are the kind of businesses that I like to invest in. This is one of the reasons that I purchased in around June or July time. In 2017, I purchased Divis Lab when it made a bottom. The second most important thing about Divis Labs is it chooses its product in a very careful way. So let me just help you understand this with the help of a history of Divis. Divis started in 1990 as Divis Research Center, and in 1994 the name of the company changed to Divis Lab. And that is when the Murli Divi had a very keen interest in chemistry, so it jumped into being a API manufacturer. Divis Lab was very late into the API manufacturing, but it found a very efficient way to manufacture the API. There was a traditional way of doing it, but Murli Divi found a very custom synthesis way of manufacturing the same product, and it chose an API naproxen which had a very huge market to share. And slowly but surely, because the Murli Divi had a very unique way of developing that API, market share moved to Divis Lab slowly but surely over time. And this is the DNA of Divis Lab. It chooses a very unique API and then tries to dominate that API. You have to remember this, because this is the kind of businesses have a stupendous growth in the future as well. Because if sector is growing and if you choose any other API, you may not end up making a lot of money. So if you choose the product wisely, that's what makes the difference between the boys and the men. Soon Divis Lab got into the third area as well, and that was nutraceuticals. So Divis currently has three main area of working: API, custom synthesis, and nutraceuticals. So now let's look at the 5 main growth drivers for Divis. And I will refer to one of the reports of Sher Khan that has been published 6 months or 1 year back, and it has growth drivers that I would like to highlight. The first growth drivers is, of course, the API that Divis is manufacturing, where it has 60 to 70% market share, and it is expected that those APIs will continue to grow in double digits. So because they have a dominant share in it, and they will continue to dominate that APIs. The second one is they have certain APIs where they have under 30% or around 30% market share, and Divis is doing a capex to get more market share into those APIs as well. So that's the second biggest growth drivers for Divis Lab. The third key growth driver for Divis Labs is the sartans API, or getting into the sartans API. Sartans API has a huge application, and there's an issue with the sartans API recently. Recently means in the past 2-3 years. There is a cancer causing agent present as an impurity in the sartans API. But Divis is able to manufacture the same sartans API without that cancer causing impurities. And so it has a huge advantage, and that can be the next big growth drivers for Divis. The fourth key growth drivers for Divis is there are more than $20 billion of patents are going off patent in the next 2 to 3 years. So this can give Divis a good advantage, because there will be a lot of non-innovators jumping into this pool. The fifth key growth driver for Divis Lab will be the revenue mix. 44% of the market, 44% of the revenue of Divis comes from America, and only 10% comes from India. So there is a huge potential for Divis to grow in India as well as in Asia as well. And this can lead to good growth for Divis in the coming years. Finally, I would say, though Divis Lab is one of the large cap, but looking at the growth engine and the opportunity ahead, it may be just like yet another mid cap or a small cap. It can keep on growing, it can keep on compounding the wealth. So, because it's a low cost producer, it carefully selects its API and dominates that API market or the market share. And it selects the API based on economies of scale. So it doesn't get into an API which doesn't have a huge market and then dominates it. So once you are a low cost producer, you can dominate the market and you carefully select an API. That's the classic case of success. Finally, the most important question, why the share price keeps falling. The reason I see it is because of high base effect. So in COVID times, Divis used to manufacture a drug that was used as a medicine against coronavirus. And because of a huge amount of consumption of that drug, Divis had very high profit. The profit or EPS jumped to almost 50 rupees to 111 rupees in 2 years time. And with such a high base effect and such a high growth rate, the Divis cannot continue at that growth rate. So now what is happening is, because the EPS is coming down and it is falling compared to year on year growth, that is why the share price is falling. This is what I think is the reason for the share price, because if you look at the chart, you will see that the day Divis Lab announces the result, the stock crashes by 5-10%. And it has been the case for the last 2 or 3 quarters. And I think so this will continue for 1 or 2 more quarters till the base effect goes away. And that is when it may be the right time to accumulate Divis Labs. I hope this helps you understand the share price movement of Divis Lab, as well as understand the business in a little bit more detail about Divis Lab. I will recommend you do the research, go through the annual reports, and you will be able to understand a lot about Divis Labs.